Hello everyone and welcome to the YouTube channel of BeingACCA. This is Dashita Gupta, ACCA affiliate, and in this video we are solving the last question of our section B, PM pre-September 2023 mock, and this is Greenward Company. Greenward Company manufactures lawn movers. It has just developed a new model with enhanced blades that will improve the speed and effectiveness of grass cutting. Greenward Company's maximum capacity is 100,000 units. The following estimates have been made of costs at different levels of capacity. For its previous model of lawn mover, Greenward Company was, on average, operating at 90% capacity over the last few years. Now we have the production, various levels of activity, material, labor, and fixed costs given to us. Greenward Company's management accounting department has estimated that for every complete 25,000 lawn movers produced, so this is important to note over here, every complete 25,000 lawn movers used over here. So with this, we will be needing 110,000 of incremental costs will be incurred in addition to those listed over here. So the highlight over here is uh, that complete 25,000 lawn movers. So if it is 10,000, 12,000, even 24,000, we will not be adding these incremental costs. For complete 25,000 more, we will only be adding this cost, otherwise not, right? So let's see what the first question wants us to do. What is the total budgeted total production cost if production is 90% of maximum capacity? So let's see, the maximum capacity is 100,000 units. Now so the 90% of the capacity will be nothing but 90,000 units, which is 90% of 100,000. Right. So now we have to find out our costs at this level of activity. So first of all, let's see the material cost. So material are completely variable costs. So this will be, we have our material costs at, uh, let's use this one to calculate all our, uh, things. So this is 2584, and mind you, this is in 3 zeros. So if I just divide this by 95, I will have my per unit cost. So my per unit cost, if I divide 2584 by 95, I get 27.2. So this is my per unit material cost. And then I have my labor cost. Labor costs are again completely variable costs. So I will just divide 2983 by 95, and I will have my per unit labor cost, and this will come out to be 2983 divided by 95 gives me 31.4. So this is my labor cost. Now let me find my fixed cost. So with regard to my fixed cost, let's see that the fixed cost for all three levels of activity is this much only. And let's look at the this part, what this paragraph was talking about. So first of all, the fixed cost remains 2,144,000, and then I have 90,000 units. That means for every complete 25,000 units, I will need to add 110,000. Now let's see, for 90,000 units, if I divide 90,000 by 25,000, how much do I get? 90,000 divided by 25,000 will give me 3.6. That means 3 is complete full increment and this is 0.6. So since the word complete is mentioned over here, I will only be taking 3. So I will multiply 110,000 with 3 and add it to my total costs. So this will be taken. Why am I not? So another way to see this is that for every 20,000, complete 20,000, we need to add 110 once. So if there are 25,000 ones, so I will be going for one addition of 110,000. Then at 50,000, which is again another 25,000 added, I will be going for 2. Then at 75,000, I will be going for 3. And then the next one would be at 100,000, then I'll be going for 4, but I'm not going to 100,000, I'm only getting 90,000. So that is why I will only add 3 parts over here, 3 multiplied by 110,000, which is the incremental cost that has to be added. Now let's find out our total production cost. So the total production cost will be nothing but adding our two variables. So this will be 27.2 plus 31.4, and I will multiply this by my number of units, which is 90,000. Then I will add my fixed cost of 2,144,000, and then I will add 3 times of 110,000. This will be 330,000. And if I just sum all of these costs up, I'm going to get 27.2 plus 31.4 gives me 58.6. I'm multiplying this with 90,000, and with this I get 5274,000. Then I'm adding 2144,000, and then I'm adding 330,000, and with this I have 7748,000. So that means option C is my answer. Then I will move on to the next question. Right. Greenward Company's management accountant has identified machine preparation and running costs that have been excluded from the budget. He also believes that the sale demand will result in Greenward Company using 95% of the maximum capacity. Each lawn mower will require 0.15 machine hours. The following estimates have been prepared for different levels of machine hours and costs. So this is the machine time given to us, and these are the machine costs. And all right, what are the estimated machine costs if the production is at 95% of maximum capacity? So the maximum capacity that we have is for 100,000 units, right? So for 100,000 units, we will need 0.15 per unit. So that means we are needing 15,000 hours. So if we are operating at 95% capacity, we will be needing 15,000 multiplied by 95% hours. So this will give me 14,250 hours, right? So these are the number of hours that I'm going to need. Now let me use the high-low method to find out how much will be my variable cost. So out of this, the highest activity that I can see is 15,000, and the lowest activity that I can see is 9,000. So I'm going to be using these two figures. So this will be 270,000 minus 216,000, and dividing this by 15,000 minus 9,000. So I have my answer over here as 270 minus 216 gives me 54,000, and I'm going to divide this by the difference between the denominators. This comes out to be 6,000. So I get my answer as 9. So my variable cost is 9 per hour. Now let me find out my fixed cost. So fixed cost will be nothing but 270,000 minus 9 into 15,000. So this will give me 9 into 15,000 is 135,000. So 270 minus 135 gives me 135,000. So my fixed costs are $135,000. And now I need to find out my estimated machine costs at this level of activity. So I'm just going to put my values in these variables. So I have my fixed cost of 135,000, and then I have variable cost of 9 per hour. So I will multiply this with the number of hours. So 14250 into 9 plus 135,000 will give me my final answer. And 9 multiplied by 14250 is 128,250. I'm adding 135,000 to this. And with this, I get my answer as 263,250. So second option is the right answer. Moving to the next question. I have Greenward company's sales director has decided that the budgeted sales price of the new lawn mower should be $120 and the budgeted contribution should be $50. Actual sales of the lawn mower were 94,000 units and the sales revenue was this much. Using a flexed budget approach, what were the sales variances? So to give our answer, we will have to calculate sales price variance as well as sales volume variance. So let's first find out these figures and then only we'll be able to give our answer. So we were selling 94,000 units. So at 94,000 units, my revenue would have been, according to $120, it should have been 11280,000. This should have been my revenue, and my actual revenue is this much. So if I subtract this, I get 11280,000, and subtracting 11040,000, I have the variation of $240,000. So this should have been my revenue, but my actual revenue was lesser. So that means this is an adverse variance. So only first option has this as the answer, but still let's find out our sales volume variance. So regards to sales volume, the budget has been flexed to 94,000. So when we are flexing our budget, the sales volume variance will be 0. Why? Because we are budgeting also for 94,000 units and our actual sales is also 94,000 units. Therefore, we have a 0 volume variance. And with this, option A becomes our answer. Moving to the next question. One of the Greenward company's non-executive directors has queried the use of flexible budgeting, wondering if the benefits are worth the costs. Okay, so very valid point raised, that are we, getting benefits from using flexible budgeting? So which two of the following are advantages of flexible budgeting? Flexible budgets provide realistic benchmarks for costs. Now, this is absolutely correct. Why? Because when we are changing our budgets according to the level of activities, we know that, okay, according to this level of activity, this should have been my cost, and this is something that I have achieved. So it makes the comparison like with like, and hence a more meaningful comparison can be drawn. Moving to the next one, flexible budgets are quicker to prepare rather than fixed budgets. Now, this statement is not correct. Why? Because flexible budgets often take more time to prepare, because we are producing this for different levels of activity and we need to analyze the fixed and variable elements of the costs. Moving to the next one, flexible budgeting allows for assumptions about activity levels to change. Now, this is absolutely correct. Why? Because in flexible budgeting, we are taking different levels of activity into account, what our costs and revenues will be at different levels of activity. So yes, definitely this allows for different assumptions also about these activity levels. Now moving to the last statement, flexible budgeting allows incremental budgeting. Now we need to understand why this statement is false. Flexible budgeting and incremental budgeting are in itself two separate things. They are different from each other. Incremental budgeting means that you are adding something to the last year's figures, whereas in flexible budgeting, you are only preparing your budgets after you know how much will be your levels of activities, right? So this is the last question that we have for this scenario. Another non-executive director has wondered whether the budgeting system should be changed to an activity-based budgeting approach. Which of the following would not be an advantage of introducing an activity-based budgeting approach? So let's read the scenario, the options that we have over here. It aids cost control by focusing on what drives the cost and controlling the drivers. So now we need to understand that the answer needs to be not an advantage of ABC. So the first statement is definitely an advantage. It helps you to focus what is driving the costs and what is controlling the drivers, right? So this is an advantage, hence not your answer. It helps identify and eliminate activities that do not add value. Now, this is also definitely an advantage of ABC. It facilitates the control of overheads that relate to several different activities. Now, this again is an advantage of introducing ABC approach. Now, let's look at the last one. It suits organizations with a small number of products and few cost drivers. No, this is not the case. It is relatively more suitable for complex organizations, large organizations, and where they have multiple products and so many cost drivers. So this statement is your answer because this is not an advantage of ABC. So with this, we have come to an end to section B of your PM pre-September 2023 mock. Please stay tuned for the next videos. We'll be solving section C of this mock in those videos. Thank you so much for watching.